Welcome. This is Amanda Crowther from Simple Acquisitions. As a real estate investment company that partners with accredited investors, one of our goals is to communicate information about the various aspects of multifamily assets to private lenders so they can be better armed to make informed decisions about investing in this fabulous real estate arena. Today's video is going to touch on the ins and outs of analyzing apartments, which are two key components to successfully analyzing multifamily properties. Unlike residential properties where emotional attachment to a home can influence a sale, multifamily properties are typically bought and sold more objectively. They are based on the financial performance of the property. As you can imagine, having accurate property financials to evaluate is extremely important. So what numbers do we look at when analyzing apartments? Number one is income. Asking the seller for a full income statement, which is called a profit and loss statement, is a good place to start. You need to look at gross rents. How much rental income is coming in from the tenant's rent and from any other sources such as laundry or parking. Comparing current year rents with previous years allows you to see if there was a rent increase or not. If rents went up, was it the result of an annual increase or were there fewer vacancies? If rental income was down, was it because tenants were not paying their full rent? Or were there more vacancies and competition forced the owner to lower rents to entice new tenants? These are the types of questions we consider when reviewing the income statements. Number two is expenses. Like with just about everything, where there's income, there's expenses. So we verify each one carefully and review them year over year. Is the management company efficient? What repairs and maintenance were done? Are there opportunities for improvement? Was there an increase in advertising costs? If so, it might signal that vacancy was an issue. Identifying how we can reduce expenses once we acquire a property will go a long way to increasing rental income and then increasing its cash flow. The income and expenses tell a story. They give us a good idea of what is going on with the property, how it's been managed, and how physically and financially healthy it is. They help determine the approximate value of the property and what the expected return will be, which in turn allows us to make an educated decision on whether or not to invest in that particular property. And that gives our lender partners the peace of mind to know we are performing the necessary due diligence. A cautionary note: one needs to be mindful that the rental income and expenses you are shown are not always accurate. We always run our own numbers and ensure we allocate sufficient funds to cover each expense. This helps set the stage for a successful acquisition. A second warning worthy of noting is to never take the seller's word for their rental income and expenses, no matter how trustworthy they may seem. Do your own homework. Get your info from the source. For example, get bank statements and tax return statements and obtain copies of property tax bills and service contracts. So that's it for today's multifamily topic. If you want to learn more about how getting involved in multifamily real estate can benefit you, then get in touch with us. Visit the Contact Us page on our website at www.simpleacquisitions.com. And if you haven't done so already, visit our homepage and sign up to receive some great information about private lending and what's involved with partnering with us here at Simple Acquisitions. Now is a great time to invest in real estate. Don't delay in making your money work harder for you. And remember, real estate doesn't have to be complicated. With Simple Acquisitions, it's smart, secured, and simple. Thanks for listening. I'll see you next time.